Hey everyone, this is Sandeep Anand. Imagine there is a hot trend out there, like a big happening trend. People are making money left, right, and center, like within days, within months, within few months, somebody made $1 million and all of that. Let's take a couple of examples, like let's say SPACs, recent SPACs, and the crypto mania that's going around in the market, which is multiplying money 4, 5, 50, 100 times for people. And most often, have you noticed that when we try to jump into those kind of latest trend stocks, exactly 2 months later or 3 months later, after we buy into that, the Bitcoin crashes or the stocks gets corrected brutally, 70, 80% into those trends that we put our money into. And we feel we are always unlucky in that aspect. Have you ever wondered why this kind of a phenomenon happens? Now, it's got to do with actually the behavioral finance aspect of investing, which plays a very key important role in the way how investors act or behave in the markets. One of the most prevalent elements of behavioral bias of humans is trying to find the next big idea, the next big investing theme that can create 50, 100 times multiplying effect on your money or on your capital. And we tend to usually look at the recent strong performers and extrapolate too much ahead into the future, and the market prices those kind of trends and the strong performance in the recent times way ahead. It's because of the demand for such kind of latest trends or the stocks. So just to illustrate point, what is fad or trend investing? Now, it's not really investing, you're trying to time it. Okay. So some of the latest trends are Bitcoin, SPACs, the special acquisitions, special purpose acquisitions, Reddit bets, EVs, electric vehicles. Reddit bets were GameStop, AMC, group of investors were taking the stock prices higher. And, we have seen the last three have got corrected brutally, SPACs, Reddit bets, and EVs already in the last 2 months. Many of the stocks had fallen 80, 90%. We have seen that. And Bitcoin is still continuing its stride. I don't know where it is headed to, but we'll wait and watch. Now, what causes this kind of a behavior in the markets, like catching the next big trend, jumping into the bandwagon to fetch money, to gain money? What causes this? It's to do with something called as recency bias in behavioral economics. Recency bias is actually the tendency to place too much emphasis or importance on recent events or over the historic ones. I mean, this is a cognitive bias that in behavioral science that causes humans to act in a way influenced too much by the recent events. Now, the recency bias influences investors a lot in the markets. I mean, all of us go through recency bias. And the funny thing is, with behavioral aspects, is we seldom realize we are going through the recency bias, or we are undergoing that recency bias, or we are acting under the influence of that bias. The key tenet of the recency bias in the markets is the market participants thinking that a recent stock market phenomenon, it could be a correction on the negative side, it could be a big bull market on the positive side, or in a trend, as I said, some trends, it'll continue to extend into future, way ahead into the future. We try to price that way ahead in the future. It could be bearish view or bullish view. And because of that, it creates anomalies in the markets. Now, coming back to our efforts to fall for the latest fads or search for the hot trends, finding the next big investing idea that will change my life, that again is influenced a lot by recency bias. Just because an asset increases its price by multifold, we tend to jump onto the bandwagon for the fear of missing out or fear of losing out. And the main villain out there is recency bias. Now, there is nothing wrong in trying to catch the next big trend or investing early into a big trend that is happening out there. There is absolutely, that's the best way to invest if somebody can. But one need to realize before getting to those such kind of trends, one need to understand the asset pricing. Now, we need to overcome this recency bias dysfunction, right? I mean, it's very important for us to act sensibly in the markets and not get hurt. What can we do that? I mean, to overcome this dysfunction. First point is understanding that we don't need to attend all the parties out there. Similarly, we don't need to participate and invest in all the trends out there. It's not required to be participating in everything out there. The purpose of investing in stock market, as we all know, is to make money. And as long as our existing portfolio is doing that sensibly, compounding 20, 25% over long periods of time, It's okay to have some allocations in some hot trends, past 2 to 3% of your portfolio, nothing wrong in that. But understanding the pricing mechanism is very important before we jump into the bandwagon. Now, even if we understand a trend very well, it's important to look at the valuation and not just at the price movement. And it's very difficult to extrapolate or evaluate or value such kind of trends where it's growing exponentially. It's almost impossible because they are geometrically progressing trends. They multiply in exponential way, and it's way too difficult to value such companies. So a good idea might be to sticking or restricting that allocation to such kind of latest trends, maybe up to 2-3%, not more than that in the portfolio. It's usually not a good idea to get into a trend a tad too early, and never a good idea to jump into trends way too late. I mean, it can hurt in both ways. Finally, know what you own and build conviction of the companies or stocks that you own. Not a good idea to keep getting into a trend, switching the stocks that you own and to the latest trends because our neighbors made money or friends made money. That's not a good way of looking at investing in the markets. Now, let me end this video with a brilliant quote from a legendary investor, Peter Lynch. He said, "The best stock to buy is the one you already own in your portfolio." And that's so true most of the times. And with that powerful quote, let me end this video. I wanted to bring this recency bias to the attention of my fellow investors so that you can overcome this recency bias and act sensibly in the market. And at the same time, we don't get hurt getting influenced by the recency bias. Trust it was helpful. Thanks for staying with me.